Stock Play of the Day is an educational program. Any statements made by Ally Invest employees are not intended to be or should be considered investment advice, a recommendation to buy, sell, or hold a security, or a recommendation to adopt an investment strategy.
Hello and welcome to the stock play of the day. Today's stock is Apple. We'll discuss should we pass or should we play? Hello, my name is Brian Overby. I'm the senior options analyst with Ally Invest.
And I'm Lindsay Bell, Chief Investment Strategist with Ally Invest.
All right, Lindsay, markets are rocking. We got a big earnings week coming up this week. A lot of the FANG stocks, including the one we're going to talk about today. What do you see in the markets this week?
Yeah, we've lost a little steam this morning, but the markets are kind of treading water here, looking a little bit flat at this hour. But I think there's a lot of different things that are contributing to today's market action. This morning, we heard from J&J. They reported earnings. They beat on the top and bottom line. As you said, it's going to be a very busy week for earnings. But in addition to their earnings report, they mentioned that they're going to have phase 3 trial data available very soon. So that's a positive. And what the CFO, also said about that trial data is that the information would be very robust. So the market's reading positively into that. We also heard this morning from Eli Lilly and Regeneron, positive news on their antibody therapies. So on the vaccine and medication front with regards to tackling the COVID virus, there has been positive news this morning. So that kind of got people amped up this morning. Biden, as you probably know, has been out there saying that he expects most Americans will have access to the vaccine by this spring, which means the sooner people get vaccinated, the sooner we are close to a normal operating environment from an economic perspective. Speaking of which, thinking of the economy, a bunch of news there too. The IMF came out with their annual outlook for GDP growth on a global scale. They're looking for 5.5% growth in 2021. That's an improvement from what they had expected. Their last estimate was in October, and they were looking for about 5.2% growth globally. 2022, they also upped their expectations. They're looking for growth of 4.2%, so a little bit of a deceleration from what we're going to see this year, but still very solid from a global perspective. They increased expectations for what they think we'll see in the US, which is positive. They actually increased their expectations for GDP this year in the US by 2 percentage points, all the way up to 5.1%. So that's a positive. China obviously leading the way at 8%. What else on the economic front? Case-Shiller Home Price Index came out. Home sales, the prices of homes up a whopping 9.5% in the month of November. Remember, this is November, so sales were still pretty robust back then. We've seen a little bit of a tapering off in the last couple months. So it's possible that the prices could come down a little bit, but the reason prices are going up is because there's simply no inventory out there, Brian. It's really a seller's market. Hopefully things will change though in the spring when we see more on the home building front on new home sales. But we're going to get existing and new home sales this week. We're also going to hear about consumer confidence and sentiment. And then we're also going to get the PCE inflation index, which will measure what inflation has been doing, because there's been a lot of talk in the market about increasing inflation impacting the market or potentially hurting the market going forward. So definitely looking forward to seeing what that number looks like on Friday. But back to the earnings story, we have 116 companies, almost a quarter of the S&P 500 reporting results this week. And like you said, FANG is part of the mix, and Apple, our stock play of the day, will be reporting on Wednesday after the close. So we're going to talk about what earnings can look like from there. But Brian, the VIX, I know we always look at it. It still remains elevated. It came down for a little bit, but it's back up. And more importantly, the outdated options are looking for the volatility to really remain elevated in the months ahead. Isn't that right?
Yeah, definitely. And Here's one of the things. So I'm showing on my screen. We've been showing this watch list for months now. Basically, it's become a staple of the stock play of the day since the downturn in March. And if we look at it here, we see that, yeah, today the VIX is actually at 23.24. So it's been hanging right around that range. And we've talked a long time about it getting below 20. I actually think at this point in time, that would be a good sign for the marketplace, in that it's such an arbitrary number, and it's been so long since we've been below 20. We've touched it quite a few times, but we just can't seem to break that level. But as you mentioned, as we go further out in time, what's kind of interesting is we see we have the February futures trading at a 25% implied volatility. Then we go to March, that's at 27% implied volatility. And then the Aprils are the 27.5% implied volatility. So not only are we seeing elevated vol right now, but as we go out further in time, we're actually creeping up in an implied volatility over the last couple of weeks, as opposed to down. Now, in general, I think the news overall would be good as far as the pandemic front is concerned. We've had some issues, with unemployment, threats of shutting down economies again, but not necessarily all that happened. We've kind of still trudging forward, trying to keep the economy going slowly but surely. But the options marketplace sees more volatility going out towards April than less. And that's just something worth noting. That's one data point that we'd want to talk about. Okay, so Apple announcing earnings after the close tomorrow. What do you see in Apple? And this is obviously going to be a speculative play that we're talking about today because of that earnings. So let me pull up a chart on Apple for you, Lindsay.
Yeah, earnings right around the corner. Looking at the chart, I'll let you kind of go through what you're seeing from a technical perspective. But it is a pretty interesting shape there. You can see in the last 11 days on the right-hand side there, this stock is up, not the last 11 days, excuse me, I'm mixing up my numbers. Last 6 trading days, including today, the stock is up 11%. That's where I was getting my 11 from. But this is a cup and handle, right, Brian?
Mm-hmm. So I guess I'll just comment on it real quick, like, since you already brought it up. If you look at it, this would be considered a cup and handle chart pattern. So basically on Friday, we closed right here, right at that 140 level, which basically was very close to that high that we set back in September. So the fact that we broke out the last couple of days overall is a good charting pattern for Apple. And there hasn't been a lot of good, honestly, since September. We've just been chop ever since then. And that's also been true of the NASDAQ stocks. What's really been leading the way, which is a good thing overall for the market. So once again, mixed metaphors when you see the VIX going higher, but you also see the Russell 2000 index leading the way, the small caps, which overall usually is a good sign for the economy. Then we see a lot of the NASDAQ stocks did a lot of chop, and we finally see something positive on a charting perspective from Apple. We see this little breakout here. So earnings are obviously going to be the storyline more so than the charting pattern. You still need to see where they're going to come in at their earnings. But with that said, looking good on the chart leading into that earnings announcement.
Yeah, and I will say that expectations for these guys from an earnings perspective have risen over the last several weeks. So expectations are high. If you look at Wall Street's ranking of the stock, everybody's pretty bullish, a lot of overweights out there. But their mantra is that the numbers, the consensus estimate that does exist is too low, and these guys are going to come in and beat. We'll see. It's difficult when you see a stock rise that much going into earnings. It might be a sell the event type of news. But when I look at this stock in general, in the last year, you mentioned the NASDAQ performance being really strong. Apple was one of the best FANG stocks since the start of 2020. So since the beginning January of 2020, we've seen this stock advance 90%. That is really impressive return in 1 year, whereas the NASDAQ has advanced about 50% over that same time period. So Apple definitely being one of the better performers within the FANG space, and then also within the NASDAQ in the last, almost year. When I look at it from a valuation perspective, I always am looking at valuation. It's trading at about 35 times on a forward PE or price to earnings basis. That's pretty stretched. Its 5-year historical average is 17 times. Now, the bulls will argue that, okay, but this is a company that is they're changing the nature of their business, that and they now deserve a higher multiple for the businesses that they do operate in as they expand more into services which are higher margin businesses. They deserve a higher multiple, which I can completely understand, but 35 times still seems a little bit stretched. So that's another thing that you have to be careful with going into this earnings report. That being said, obviously, this is a company that has benefited from the pandemic and also the accelerated use of technology in our everyday lives, right? So there are some things that have changed from a social and economic standpoint that are certainly going to benefit Apple going forward. I think that the reason that you've seen such positive performance over the last year is, the benefit from the work from home trade. There's just been an increased and sustained engagement in the app services, the app store. So that's certainly very positive. And then also you have this drive and interest in 5G adoption. So that's also benefiting, and that's going to help iPhone sales in the past quarter. They launched the iPhone 12 mid-quarter. This was the holiday sales quarter. It's always one of the best quarters for the company. So they launched that lineup in the middle of the quarter. Sales for the iPhone are expected to, on a consensus basis, rise more than 6%. But Morgan Stanley, I wanted to call them out in particular. They're very bullish on iPhone sales for the last quarter for Apple. They say it was Apple's most successful product launch in the past 5 years. That's a pretty big and bold statement. They think that Apple sold 78 million iPhones, and the average selling price was $825. And so they've got revenue growth on the iPhone pegged at 14%, which is more than double what the street is expecting. So we'll see what happens there. MacBook sales are supposed to be very strong in the double digits, according to consensus. iPads up double digits. Wearables and services also very strong expectations going into the quarter. So it's going to be one to watch. They report again after the close on Wednesday. It has been, a fan favorite over the past year, obviously, when you look at the stock performance here. And today, by the way, it hit a new 52-week high. So, Brian, knowing all that, going into earnings in just, a day and a half, really, what kind of trade would you put on here, or could you put on?
Well, that was a mouthful, and thanks for that great analysis, by the way. If I'm looking at this around earnings, one of the things is it's going to be the way that I'm going to approach it is a little bit of a fear of missing out. Ideally, if you were looking at Apple and you were going to trade it based off of the charting pattern that you saw, you would have bought it on Monday. Why is that? That's because it broke out of that pattern to the upside and showed some good positive signs, and the stock has been up. We missed that opportunity, and we're doing the stock play of the day on Tuesday. So let's talk about what we do on Tuesday. We have earnings. We have right now, if I look at the money long straddle, basically the expected move, what the options marketplace is thinking of. And let me click on my chart and I'll show it here real quick. Like the most short-term expiration, 3 days away. If we bought the call right here, clicked here, and we buy it, and we bought the put, we're looking at paying around $9.75. Now, on a percentage basis, what the marketplace is implying is that a possible move, either to the upside or downside, would be around 6%. Now, obviously, we know that all the FANG stocks can easily make that type of move on a daily basis, let alone around earnings. But that's what the expected move is, and that's actually a little bit higher than what Apple normally would be. They're usually around a 5% or a 4.5% expected move going into earnings. This time around, we're looking at about a 6% move. That means we've got a little bit higher implied volatility, and I'm highlighting it here on my chart right now. We're showing an 88% implied volatility. So there is some risk that's involved in this next announcement, a little more than what has happened previously in previous quarters on Apple. And obviously, the market conditions in general with the VIX up around 23%, I'm sure is adding to that and is going to add to a lot of the earnings that we're going to see over the next couple of weeks. Okay, so what we're going to do is a long call spread, and we're going to manage our risk by doing the spread. We're going to give ourselves a little bit more upside, and we're going to have a little bit of downside. Now, if the earnings were good, this is the way I would be looking at this. Now, 100% this is not meant to be a recommendation because it is a speculative thing. We're obviously thinking that the earnings would be fairly good going into this. So this is speculative. We're going to manage our risk by the way that we set up the trade. And basically, it's an all or nothing type trade. That's the way the setup is going to be. So my concept would be that I would put this trade on. And if I wanted to get long Apple, I would let this trade play out. And then after the fact, after the dust settles, I decide, well, do I want to buy my 100 shares of Apple now? As I said, since September, the market's really been a lot of chop in the NASDAQ just overall. So this is one way that you could get into the market and say, okay, I want to be in something going into earnings, and then I'll decide what I want to do more long-term on Apple after this earnings report. All right, so with that said, a long call spread will accomplish that. We're going to have a lot of premium. I already mentioned that we're at 88% implied volatility on the nearer term option contract. Now let's go out a little bit further. We're going to go out about 10 days. We're going to give this a little bit more room to play out. And we're going to go a little bit in the money and a little bit out of the money. So here's how I'm going to set it up. Let me show you the Ally Invest option chains here. And we see right now with Apple, we're at 142.25. We're down about 67 cents on the day. The January 29th expiration is trading at the 88% vol. That's got 3 days remaining. If I scroll down and I look at the 10-day remaining expiration, we're going to be going a little bit in the money. We're going to buy a 140 strike call, and then we're going to sell a little bit out of the money option contract. We're going to buy a 145 strike call. That means the maximum that this could trade for is $5, and we're going to look to pay approximately $2 for this trade. So in this instance, when I first pulled it up, it was at $2, so it's already up to $2.10. It's up a little bit, so Apple's moving, obviously, like most stocks are right now overall. So at this point in time, we're paying $2.10 if we could fill at the midpoint. Not always guarantee a midpoint fill. And once again, not meant to be a recommendation. We're just trying to learn here on the stock play of the day. I'm going to click the trade button, and I'm going to put this over in the right rail. Now, once I do that, and I clicked the wrong arrow, but here we go. Once I put it in the right rail, this would be the official paper trade. I'm going to put the midpoint of $2.10 in. We'd be buying to open one of the 140 strike calls, a little bit into money, selling to open one of the 145 strike calls. Ideally, I'd like to pay $2 just for simplicity's sake, but right now the market's moved. It's at $2.10. That means it's $210 plus commission. That's our maximum risk. Our upside would be $5 is the most that it could pay. I should say that differently. The most that it could trade for is $5, which is the width between the strikes. So you're looking at $2.90 worth of upside. So if we put this trade on and the market does make that move, the expected move of around $9, it's obviously either going to be in the money or it's going to be out of the money, and you're not going to have a lot to be able to trade with. Now, if it's somewhere in between, that's possible too. But usually after earnings, you're going to see some type of move either to the upside or to the downside. So if I'm doing this trade, I'm really considering it an all or nothing trade. I'm not really trying to manage the risk. It's 10 days. The stock can play out. It gives me a little bit of management capabilities by going out 10 days instead of only 3 days. We've got a little bit more time for it to actually play out. But overall, we're managing our risk by the way that we approach the spread. If we lose, we can lose $2.10. If we win, we can make $3 or $2.90. And that's how we're going to manage our risk with this trade. So an interesting way to approach it. I want to get in Apple. If it does come out good, maybe I would have liked to have bought the stock prior, but this is one way to be in Apple going into this, as Lindsay said, one of their most interesting quarterly earnings reports that they've had in quite a while. All right. Well, let me scroll down now real quick. I'll just show you the profit and loss graph. I guess I forgot to put that up, and then we'll get ready to answer some questions. So if you have any questions, please make sure you put them in the chat box. Lindsay's going to be addressing them right now, so you might want to fire them up. If I look at our profit and loss graph, this looks a lot like the long call spread that I showed you inside the options playbook, but this is as of today. And one of the things that I do want to highlight is that this colored line is very flat as of today. And that's because implied volatilities are so high. As expiration approaches, we expect implied volatilities to come down after the known news event happens. And if I go down to, let's say, 2 days to expiration, and I start graphing it, now it looks a little bit more like it would normally without an earnings report. And we'll go down, I'll go all the way down to 0 days. And then all of a sudden you see that it starts morphing in to the dotted line like we see here on the Ally Invest profit and loss graph. All right, that gave them a chance to answer some questions here, or to ask some questions. Lindsay, what do we have to start with?
Yeah, we got a good chatty box here. So we'll start here with Wayne. Wayne says, hey, Wayne, Brian, since Apple's 30-day implied volatility is around 48%, what about doing a bear put spread to take advantage of the higher volatility and premium during earnings?
Well, I don't mind that as much, except for the fact that when you're doing the bear put spread, you're really doing the opposite of what we just talked about today, in that you are going to bring in, you do get the benefit of higher implied volatility, but we know that there's a known event. So you're getting that vol because of this event, because it adds risk to that position. And if you do the bear put spread, you're bringing in a smaller credit and you have more risk if you're incorrect, and we get a big gap down in Apple, right? If we do the bear put spread, we want stock to stay flat or we want it to go up. So here we're looking at saying we're going to risk $2, hoping to make $3. There you're saying I'm gonna hopefully make $1 and maybe I might lose $4. So it's just a totally different approach to it. But implied volatility is being high. A lot of times around earnings, I want to avoid that urge because you see that high vol, you think, well, I want to take advantage of this, but the high vol is there for a reason. Fair enough.
All right, great answer. Very informative. So Charles Willis asks, I've been buying Apple Feb 2012 with four shares, got the 1-for-7 split, and now own one block of 100 shares at 38.32. Please share with me great gains. This is a problematic play for me.
Okay, well, I don't know if there was necessarily a question in there.
No, sorry, I was just trying to understand.
You did really well, and that's great. Yeah, if you bought Apple around the split, you've done really well when they did their 7-for-1 split. So it's a scary scenario. If you're worried about the loss to the downside, if you're worried about trying to hold some of your gains, the simplest thing to do would be to buy a long put. Now you're paying for it if you buy it, but you still think about that. If you have that type of gains, you want to buy a long put that's just going to get you through earnings. Maybe, and I'll just do I would go as short term as possible because you're doing it about that date. And I would maybe look at the one, or I guess I'll add some strikes. Look at something that you feel comfortable. Like ideally, maybe the 139, that's what, 4 points away. That's a small percentage. So maybe pay $3 for the 139 and protect yourself going into earnings a little bit. And ideally, just like any insurance or any time where you're trying to protect yourself, you want the stock to go up. I mean, you're just doing this because you're nervous, because of this known event. And you might be nervous that this expected move of $9.75 could happen to the downside, and you just want to protect yourself by being long a put. I don't. Yeah. And I'll just say one last thing. I don't know if I like selling calls around earnings because once again, I'd rather buy the put even though you got to pay the premium, mainly because I just don't want to cap my upside if the earnings are good. Okay.
That's fair.
Now I'm done. I'm really done this time.
Okay. I want to address some of these questions that we're getting from Robert Hansen and Augustine Ramirez. Considering, they're questioning why we no longer offer trailing stops or ones that cancels other trades. And, we appreciate the question, but we still do. I just want to make you sure you're aware that we do still offer other order types that can be entered in the platform, such as limit orders that allow customers to buy or sell securities at a specified price. For example, one example is a stop limit order where which you can buy or sell a security that combines the features of a stop order and a limit order. Once the stop price is reached, the stop limit order becomes a limit that will be executed at a specified price or better. So there are different things that we do offer, even though we don't have some of the more advanced trade options. at this time. If you need help with thinking through some of the trades you want to make and other options that we have, we're happy to give us a call on our service line. We're happy to address them. So I hope that answers your question. And then the last question too, I'll just quickly answer it. Donna Gordon, hi, is there a way via ALA I'm able to buy Amazon at a fraction of the cost? We unfortunately don't offer fractional shares at this time. We'll be the first to update you if that changes. So thank you all. And one more comment I did see from Roger Wright, Brian, he got your stock play of the day book from VectorVest and he is enjoying it. So
awesome. Thank you, Roger.
So there you go. But that's all the time we have. We went over because we started late, but we're going to have to call it a day. But be sure to tune in on Friday for a stock play of the day overtime with Brian. He's going to review this trade that we've done with Apple and see where we're at and adjust it as necessary. So that's it for today, right, Brian?
Yeah, that is. And so I'm going to remind you, we're going to start doing these on Tuesdays now. So every Tuesday is going to be our stock play of the day. But if you don't want to have to think about it, just click that bell and or click subscribe and ring that bell, and we'll make sure that we alert you every time we have a new stock play of the day. Thanks for coming, everyone.